Alright guys, welcome to another episode. So let's start by doing a trade recap from what we had last week. So I was looking at this opportunity on NAS100. So I got in on the buy on NAS100 right here, and it didn't even take say an entire day. So within a couple of hours I got stopped out, and you can see right here, and that's fine because you have to accept losses as well, and you need to learn from your losses, and that's the only way you can get better in this game or in this industry. So with that being said, it was a loss for me last week on NAS100. So let's look at the opportunities we have for this week. So without wasting much time, the first thing we have to look at is the DXY, and we have this pattern where we always start from the DXY. We start by analyzing the DXY, and then we drop down to other pairs and see if we have trading opportunities for the coming week. So looking at the DXY from the daily time frame, this is quite easy because we've been in this uptrend, and it's easy to tell because you see prices moving to the upside. So I like using two concepts when I'm doing my weekly focus. So I like using psychological numbers, and I like looking at the trend lines as well. When I use these two concepts, it helps me to come up with the bias going into next week. So once I have a bias, it's easy for me to set myself up for say a buy or a sell opportunity when I see it next week. Another reason why I do come up with this bias is because it tells me, say coming into next week, if price has to deliver to a certain point. So let's say, take for example right here, if price has to deliver to this point, so if price has to buy to to this point of 105, and then it's easy for me next week to look for selling opportunities on other pairs because I know what is playing out on the DXY already. And if the DXY has to deliver to say 104, then it's also easy for me to take buying opportunity on other pairs. And that's why I do this weekly focus, because it just tells me if price does buy, for example, and then I'm looking for sell, and if price sells, and then I'm looking for buys. But I need to understand where price is trying to gravitate towards, or where price is trying to move to, and that's all I do during this weekly focus. So looking at the DXY, we've had prices moving to the upside, so taking out these highs. And if we have to go with the first principle, which is just like the psychological numbers right here, so going off of this principle of psychological numbers, we had price testing this area. And once price has a test of one psychological number, the next thing that is most likely going to happen is a test of the other psychological number. So we had a test of 104, and we're looking for a test of 105. That is going off of psychological numbers only. Now we have to combine this, let's say, with a trend line that we have right here, because we understand prices is moving to the upside. And if price is moving to the upside, it means it's making highs and it's making lows, and it's easy for you to put a trend line just for a visual representation to see what's happening actually. So when you step down to lower time frames, like the 8-hour time frames, the picture becomes clearer, because now you see price testing these areas, taking out the highs, testing these areas, taking out the highs. You have a test of this area, and then you're taking out these highs. Now I draw my trend lines differently. So I know most people put the trend lines on the weeks. Again, if you put the trend lines on the weeks, it's still correct because you still have prices moving to the upside. I do it differently, and there's a reason why we do it in our community by putting it this way. So I'm not going to go deep into that, but that's how I do the trend lines. And when I put my trend lines like this, I'm looking at price reacting from areas like this and taking out the highs. You have a reaction from here, it takes out these highs. You have another reaction here, and then it takes out these highs. So two things. We had the psychological number here of 104, a test of this area, and we're expecting prices to deliver to say 105. When we combine this with a trend line that is building up, so we had this trend line being respected at these areas, so we have to maintain this bias. So if price keeps respecting this area, then we should see prices move to 105. So we have two things: psychological number of 104 being respected, we're expecting prices to go to say 105, and we have this uptrend that has been building up with price respecting the trend line. So each time price touches a trend line, you see prices moving to the upside. So when you combine these two things, you have a psychological number that tells you there's a high possibility for price to go to 105 because we've tested 104, and you combine it with the trend line that we have right here. So each time price touches the trend line, you see prices moving to the upside. So you have two confluences right here. One, psychological number, and two, you have the trend line. So I use the psychological numbers and the trend lines when I'm doing my weekly focus, and I start always from the daily time frame, because combining these two is very important. It's something I've been doing over and over again, and I've seen it help me a lot. So start from the daily time frame. I have the psychological numbers I'm looking at. Price is reacting from 104, so I'm expecting it to deliver to say 105. The next thing, I just look at the trend line that is building up, or I look at the trend that is building up, and we have an uptrend that is building up with price respecting this trend line. And if price has to keep respecting the trend line, then we're expecting prices to move to 105 next week. So we step down to say the 8-hour time frame, and let's look at the 4-hour time frame and see. So looking at the 4-hour time frame again, it's easy. You still have the trend line being respected. So when I do a top-down analysis, say from the daily time frame all the way to the hourly time frame, I'm looking at areas like this, and what I'm paying close attention to what price is doing around these areas. So we had a move to this point, and we had a rejection at this point. So we had a psychological number here of 104. You can see it clearly on the daily time frame how this rejection came in at 104. So we had this rejection at 104 from the psychological number. We had a test of this trend line, and we still see price moving towards this trend line, and there's a reaction from the buyers. So each time you have a pullback, there's a reaction from the buyers. You have a pullback, there's a reaction from the buyers. So how do you prepare yourself for next week? The things that you try to look out for is, say, a move to the psychological number again, and then you have another move to the upside. And that's very simple, because you're just using price action, and price moves by making highs and lows, highs and lows, highs and lows. And when you put, say, a trend line just for your visual representation, it makes the whole thing better. It just makes it easy for you. So I'm expecting prices to pull back to this trend line, and then we see prices continue to the upside. So my bias on the DXY is still bullish. There's no reason for me to say the DXY is bearish as of now, and the only way I'll say the DXY has changed from bullish to bearish is if we have a breach of this area, and I see price trading outside this uptrend or outside this uptrend line. So if price starts trading outside like this, then I'll say we're preparing for this bearish move for the DXY. So as of now, I still have a bullish bias on the DXY. Now this is where it gets interesting when you do the weekly focus. So the first thing is, I have a bias, and the bias is to see prices move to the upside, say to 105, or take out these highs. And how is price going to get to this point? That's the most difficult thing. We could see prices just rally to the upside, or we can get prices pulled back to this area, and then we see prices move to the upside. So that's the most difficult part, how price is going to get to 105. I don't know how price is going to get to 105, but I have a bias, and my bias is a bullish bias on the DXY. So with this bullish bias on the DXY, I'm going to use this information and move down to other pairs like US30, S&P500 and oil. And I'll show you something that's building up on, say, US30, S&P500 and oil. This is very important because these pairs, you can use them as correlating pairs. So for example, when you look at US30, this is on the daily time frame. Again, when you look at your daily time frame, you're trying to anticipate what price is going to do next. So for example, you have an uptrend that is building up on US30, and you have price moving to the upside. So each time price makes a high, you get a pullback to an area like this. Price makes another high, you get a pullback to an area like this. So it's testing this trend line, and trend lines are very important. This is very helpful. I've been using it for a very long time. Price makes a high, it pulls back to the trend line. and price has made another high. So what then is most likely going to happen? If US30 has to continue moving to the upside, then you should expect prices to pull back to an area like this to respect this similar move that's been happening right here. And that's just price action 101. When price makes a high, it pulls back. Price makes a high, it pulls back. So looking at US30 and what has been happening, when you look at it from the daily time frame and you see this uptrend that has been building with price pulling back to areas like this, when you have prices right here, which is just a high after taking this out, you should expect prices to pull back to an area like this, and then you see if the buyers are going to step in again to take prices to the upside. So that's basic, that's simple. Now you have this information. Let's move to, say, the S&P 500. I want to show you the similarities we're having on these pairs and how you can position yourself, say, next week for what's going to happen. So when you look at the S&P 500 as well, you have an uptrend. You have a psychological number right here, you have another psychological number right here. When price goes through one psychological number, it tends to pull back to that psychological number, or it has a test of that area and then a possible move to the upside. And it's the same thing if you had to do, say, with the downside. You will get a breach of that psychological number, a test of it, and then a move to the downside. So looking at the S&P 500, for example, so we're on the daily time frame as well. So every time price makes a high, it comes back to this area, it makes a high, it pulls back to this trend line, it makes another high, it pulls back, it pulls back. So it keeps pulling back to this area and respecting this point. So price has pulled back to this area and we're finding it difficult to make a high as of now on the S&P 500. So what's most likely going to happen is a movement back to this trend line. So when you have this information, let's step down to, say, the 8-hour time frame to see if there's anything we can pick from there. Like, is there any price action? Is there any piece of information we can use to our advantage as well? So on the 8-hour time frame, you had prices making this massive move to the upside. You had a pullback. You've had prices making this massive move. No, so when you compare this move, this is massive, this is more of a corrective move, but again, you can tell. So you had buyers stepping in here, taking prices to the upside, and you've had buyers stepping in and they're finding it difficult to take prices to the upside. So what is most likely going to happen is a pull back to this area and then a possible move to the upside or a break to the downside. Now we'll use all this information, so we'll combine what we're seeing on the S&P 500, we'll combine what we're seeing on US30, and we'll make a decision. I'll show you how I use this as a confluence, what is happening on US30 and what is happening on the S&P 500 and on US oil as well. So on the daily time frame for US oil, so these three pairs, US30, S&P 500 and US oil, the price action on these pairs is correlating as of now, and it's very important, guys. It's very important because this can be massive coming into next week. So you have prices moving to the upside, it makes a high, you get a test of this area, there is a high, there's a test of the trend line. Difficult here to make a high, but you have this test. Now it makes a high, there's a test of this area. So when you look at US oil as well, the price of oil has been going to the upside. We should expect prices to pull back to an area like this, where you have this psychological number, you have this trend line. And for prices to continue moving to the upside, to make new highs and stuff like that, you need a pullback, you need a correction. So we're expecting a correction to come in, say to this psychological number right here, that is 80, and then there's a trend line at this point again. So these two confluences for me, when I'm doing my weekly bias, I'm looking at the psychological numbers, I'm looking at the trend, I'm looking at the trend line. So if price has to get to this point, we need to pull back to this area, and then we wait and see if buyers decide to take prices to the upside to make new highs. So while waiting for that thing to happen, you can capitalize on this already. So look at what's happening on the DXY. The DXY is still respecting its move to the upside. It's still respecting its move to the upside, and we might get, say, a minor pullback like this to an area, say here, and then you see prices moving again to the upside. But sticking to the bias on the DXY, which is, say, to the upside. So we have this bullish bias on the DXY. Let's combine this on what we're seeing on US30. So on US30, we've had prices moving to the upside, and there is this difficulty around here. There's this difficulty around this point to continue to the upside, and you can look at this here on the 8-hour time frame. So you see this on the 8-hour time frame. Would scale down to, say, the hourly time frame as well. So this is US30. That's the 8-hour time frame. Step down to the 4-hour time frame. There is this difficulty for price to go to the upside. Now this is very important, so you can put this right here like so. So price is finding it difficult to go past this point, and we can narrow it down to the hourly time frame as well. So on the hourly time frame on US30, this is what we have. We had price rallying to the upside, we had a correction, and then we've had prices pulled back to this area, and it's finding it difficult to go past this point. Let's step down to the S&P 500. We had a correction, we had a move to the upside. Now price is finding it difficult to go past an area like this, and again we step down to lower time frame, say the 4-hour time frame right here. And this is how you use confluences, guys. So on the 4-hour time frame, this is it. Price is finding it difficult to go past this point. So we had this area, there was a pullback, and right now price is finding it difficult to go past this point. That is on the S&P 500. Look at what's happening on US30. Now look at what is happening on oil. So when you come for the line on oil, this is the daily time frame. Price is at this point right now. So again, step down to lower time frame. So step down to, say, the 8-hour time frame. This is it. So on the 8-hour time frame, you have price hovering around this point right now. You step down to the 4-hour time frame as well. You see the same thing, and let's put it, say, on the hourly time frame. On the hourly time frame, you have price hovering around this point. Now you look at US30, you have this move, correction, difficulty. S&P 500, you had a correction, difficulty. Okay, so now you look at US oil, you have the same thing here. You have the same thing here. I'll make this bigger, like so. So on US oil, you had a move to the upside, you had a correction, and there's a difficulty right here. So when you combine what is happening on the DXY, if the DXY has to continue moving to the upside, watch out. You will see a drop on US oil, you will see a drop on the S&P 500, and you'll see a drop on US30. The only pair that looks a little bit different when you compare US30, S&P 500, US oil is NAS100, and the pair had a loss on last week. So I was looking for this buying opportunity, I got taken out. But when you compare this to the DXY, if the DXY has to pull back to an area like this, this is how you do this weekly focus and the importance of it. So let's say the DXY has to pull to an area like this before continuing its move to the upside. What when you look at NAS100, say from the daily time frame, NAS100 from the daily time frame is already respecting its pullback to this trend line. So you see there's a pullback here, it makes a high, there's a pullback, it makes a high, somewhat of a pullback to this trend line, it didn't really touch it, it made a high. This was perfect, there's a pullback, it makes a high, pullback consolidation around this point, then it makes a high which is like shallow. And right now we have price pulling back to this point, so we should expect prices to go to the upside to make new highs on NAS100. So if we have sellers coming in on the DXY like so, then we should expect NAS100 to breach an area like this with all the sellers coming in, you should expect this to get violated and you see prices moving to the upside. Now let's look at the DXY again real quick. For these buys to come in on the DXY, so for buys to come in on the DXY, we might see prices pulling back to an area like this. So if this happens, what will you see on, say, US30 and these other pairs? You might have prices testing this area on US30. On the S&P 500 as well, you might see a move like this. On USOIL, you might see a move like this. Now, the important thing about doing the market focus is it gives you this level of confidence moving into next week. So for example, if the DXY has to drop to an area like this before doing the buys, and you see, say, on US30, you're expecting a move to the upside. So if this has to drop, then you should expect a move to the upside on US30, S&P 500 and USOIL. And for some reason, you see, say, US30 finding it difficult to go past this point. You see the S&P 500 staying within this area. You see, say, USOIL staying within this area. Now that is more confluence telling you when this eventually decides to move to the upside, then on US30, those sales will come in. On the S&P 500, these sales will come in as well. On USOIL, these sales will come in as well. This is how you prepare for the week ahead, guys. It's not rocket science. It's just you looking at price action and preparing for all possible scenarios. So we could see buying opportunities on NAS100 if the DXY decides to sell, because that's just a clue for me. If the DXY decides to drop, I'll look at NAS100 and take these buying opportunities. But if the DXY decides to buy impulsively, then I'm looking at, say, US30. I'm looking for these sales to come in. I'm looking at NAS100. I'm waiting for these sales. I'm looking at USOIL and I'm waiting for the sales as well. So you need to prepare yourself, guys, for all possible scenarios. And for gold, let's say we're taking gold from the daily time frame. Again, we have the psychological number right here. We have another psychological number right here. When price goes through one psychological number, it tends to pull back to this psychological number. It gets a test of this area, and then you see prices moving to the upside. You combine this principle with the fact that price is respecting this trend line that is building up. You had an area like this, you had price moving, there's a test of it, taking out this area, price moved to the upside. You had a test of this area, price took out this one. So we should see prices coming back to test an area like this for prices to continue to the upside. So if this has to happen, say we pull back to, say, this psychological number and this trend line, you can step down to, say, the 4-hour time frame or the hourly time frame. When you look at the 4-hour time frame and you concentrate on this price action, it's almost difficult for you to see sellers coming in already to test an area like this. So what I'll tend to do is, say, step down to the hourly time frame and see if there's any immediate trend on the hourly time frame that gets violated, because when you can spot a trend on the hourly time frame like this, if you can spot this on the hourly time frame and once this gets violated, then we'll expect prices to drop to an area like this to test this psychological number and this trend line. So looking at gold, US30, NAS100, S&P 500 and USOIL, the best pairs for me next week will be US30. I'm looking for sales on this. S&P 500, I'm looking for sales on this. USOIL, I'm looking for sales on these pairs. For NAS100, I'll probably be looking for a buy. It just depends on what happens on the DXY. And I have US30, S&P 500, USOIL, I'm looking for sales. But with NAS100, just because price is delivering already to this trend line, I will be looking for an opportunity to go for buys again. It depends on what is happening on the DXY. So if we step down to on the hourly time frame on the DXY, and let's say coming into next week, the DXY decides to pull back into this trend line. Real quick. So let's say the DXY decides to pull back into this trend line next week, like so, before taking the buys. This could take a couple of hours as well. And when you look at, say, NAS100, we could get, say, some good buys to an area like this. And I'll probably stop because I need to see now the reaction from the buyers on the DXY around this point. If they decide to step in, then I want to quit with my buys on NAS100 at an area like this. So it just depends on what is going to happen next week. And always do this focus, guys. Have your buyers, you know what you're looking for. But if price decides to do a different thing, then you switch your buyers again. Personally, I always have my buyers going into the coming week, and I monitor everything that is happening. I look at every piece of price action. I study it. I look at the pullbacks. I'm looking at clues. I'm looking at price action. I'm looking at structures and things like that. I'm looking at the trend lines, next psychological numbers where price can deliver to, and then I'm making decisions. So that's it for me, guys. That's the analysis for this week. If you found this interesting, don't forget to hit the like and subscribe button. Alright guys, thank you. See you during the next one. Bye for now.